Nvidia just reported another blowout quarter, sending shares up 9% after hours. At the latest price, the company now has a market cap of $1.83 trillion, making it the third largest company in the US behind only Apple and Microsoft. Based on full-year figures, Nvidia has now reported $61 billion of revenue over the last 12 months. $30 billion of net income and $27 billion of free cash flow. That means the stock is now valued at 30 times revenue and 61 times earnings. That valuation is understandable considering the company's staggering growth. Fourth quarter revenue was up 265% year over year, with annual revenue up 126%. Gross margins increased to 76%, with net income margins advancing to 56%. And Nvidia also provided strong guidance for next quarter, where they expect revenue to grow another 10% to $24 billion. On the company conference call, CEO Jensen Huang talked of a tipping point where demand for accelerated computing and AI is surging across all companies, industries, and countries. He referred to the emergence of new AI factories, giant data centers that are made possible through Nvidia supercomputers. Looking at the numbers and how the world is shifting towards AI, there's no doubt that Nvidia's growth can continue, and the company will continue to grow in automotive, software, and robotics. The only question for investors is the valuation. On the latest conference call, Nvidia said that a doubling of the world's data center infrastructure in the next 5 years would represent an annual market opportunity in the hundreds of billions of dollars. AMD estimated the opportunity at $400 billion by 2027, but there is significant uncertainty about that figure. Allied Market Research says $380 billion by 2032. If the market does hit $300 billion in 5 years' time and Nvidia maintains a market share of 75%, it would be making $225 billion of revenue in 5 years' time from data centers on its own. Include Nvidia's other segments and its annual revenues could increase to $240 billion, and a net income margin of 40% would then equate to profits of $96 billion. At 30 times earnings, the company would then be worth $2.9 trillion, which translates to an investment return of 9.5% per year. So if Nvidia and AMD are right about the size of their markets, an investment in the stock can still work out. But at some point, growth will have to slow down. Tech giants continue to invest in their own chips so that they don't need to rely on Nvidia. The numbers keep getting bigger and bigger, but any sign of weakness in the economy would cause businesses to dramatically cut back on their AI spending. But right now, Nvidia has all the momentum, and it's never wise to bet against the fastest growing company in the market. But these are my personal opinions, not financial advice, and I hold no position in Nvidia stock. For more investing videos, make sure to visit my website 3minutebreakdowns.com. Thank you for watching.